Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro dollar. A bullish opening along White Mariposa yesterday after the previous session's third countering bullish army. Prices sliced up through and closed over the combination of the June 2020 high at 114.22 and the bright red neckline extension. That's currently at, and that's of the August to September 2020 head and shoulder stop. That's currently at 114.69, as well as just above it the congestion area between 114.82 to 114.95, made up from the January 22 high at 114.82 and a February 22 high at 114.95, eventually peaking at the 2019 high at 115.70 before coming down to close just above the February 2022 high. This was a new high, a high close not seen since November 2021. Overhead, beyond the 2019 high, we have the November 2020 low at 116.02, then the 2023 based upper bull channel line, currently at 116.41, and the lower bull channel line extension. They're both extensions, currently at 117 even. And in between, the October 2021 high at 116.92. I'm thinking it would be reasonable to regard the April action as a potential bullish halfway hesitation for possible topside target X now in the 117.25 area. Finally, as I have said now previously and repeatedly, we are set up now with just 4 months of this year gone by for a possible annual key reversal pattern. Here, thus, if we close on Wednesday, the 31st of December 2025, either over 110.36 or under 103.53, then we'll be on. Anything in between will have a lesser outside year pattern. I'm at this stage not even going to contemplate what the result at the end of the year will be, just that we are set up to achieve one. Now, so far today, not much, as it's looking like an indecisive spinning top pattern based around yesterday's close and the February 2022 high. Cable, aka sterling against the US dollar. An unusual bullish engulfing pattern and bullish opening long White Mariposa yesterday after the previous session's bullish closing White Mariposa. It was a clear punch upwards and close over the purple neckline, currently at 132.83, of the small mid-November to early December 2024 reverse head and shoulders continuation patterns neckline extension. Now, this neckline extension capped the market 3 weeks ago and tried to do the same last week but was unable to do so. The base of the action was in the Fibonacci market high base congestion area between 132.46 to 132.98. We also saw a clear push up and over, and the close over, the bright red 2021 to date downtrend, currently at 132.96, and the August 2024 high at 132.65. The rally moved higher within a fairly quiet area up to just under the hugely significant September 24 and the 2024 high itself at 134.34. Okay, so I recently asked you to continue keeping an eye overhead at this September 2024 high at 134.34. The reason being that if prices exceed that level, then we will have set up the conditions for this market to make that rarest of patterns a possible annual key reversal. This pattern has already happened in Eurodollar, but not here yet. Beyond the September last year high, we have the September 2020 high at 134.83 and the 2019 high at 135.16, which are part of a congestion area between 134.83 to 136.43, containing congestion at 135.81, 136.21, and the February 22 high at 136.43. Now, so far today, a further attempt high, but once again falling short of the September 2024 high. It is a very significant level, though I don't think this market is done with trying higher just yet. US dollar against the Japanese yen. A second bearish black crow yesterday and a follow-on low to the previous session's counter-to-the-counter bearish dark cloud cover pattern, almost becoming a bearish opening black Mariposa, but not quite. Prices punched down through the August 2024 low at 141.66 as well as the broken pink upper trend line currently at 141.55 of the well highlighted early February to late March descending wedge pattern, and a dark blue neckline extension for the August to October 2024 reverse head and shoulders bottom, which is currently at 140.95, finally halting at the significant 38.2% Fibonacci line, the January 23 to July 24 move at 140.48. Now, though previously pierced, this 38.2% Fibonacci line held up the market back in September of last year on a closing basis, and may try to do the same as well this time. We also have just below this the pink lower trend line, currently at 140.15, before we reach the September last year low. Overall, the market remains within the larger, big picture bearish item, and that is the bright red July 24 to January 25 bearish Andrews pitchfork. The bright red upper time above currently at 149.20 and the middle time below currently at 133.91. Now, this pitchfork has shown and continues to show the bearish angle of attack of this market. However, there is another pattern, or a potential pattern, I'd like to discuss, and that is to regard the whole February to date action, possibly even the whole mid-January to date action, as a possible descending expanding wedge pattern, with the bright red upper time making up the upper trend line and the pink lower trend line making up the lower trend line. Now, I'll ponder on this one some more. So far today, a further move down, capped by the bright pink broken upper trend line, down to test the bright pink lower trend line through the significant 38.2% Fibonacci line and towards the also significant September last year low, though in no hurry to get there, it seems right now. US dollar against the CNH, the offshore Chinese yuan. A bearish black crow yesterday, almost a hammer pattern actually, after the previous session's indecisive doji cross. Prices punched down through the very slowly rising mauve medium moving average, currently 728.93, but did not manage to close below it, halting ahead of the flatlining green short medium moving average, currently at 727.73. Overhead we have the July 24 high at 731.13, and then the breached, now possibly broken, bright green lower time, currently at 731.54. And then some distance higher, the congestion between 734.41 to 734.96, containing the October 23 high at 734.75, and the the August 23 high at 734.96. Okay, so as you know, I've recently drawn a pair of pitchforks for the same move, something I don't usually like doing, as I prefer one or the other. Nevertheless, we have a bright green lower time for the bullish Andrews pitchfork with a little lower down the purple lower time, currently at 727.51 for the shallower bullish shift pitchfork. Both of these patterns are for the same action, the late September 24 to mid-March 25 move. Now, previously I'd stated that I favoured the bright green bullish Andrews pitchfork to show the bullish angle of attack. Now, well, I'm not happy with that, and unless I see something dramatic soon, I will actually retire the bright green Andrews pitchfork and instead concentrate on the purple tines of the shallower bullish pitchfork, the shift pitchfork. Now, so far today, a dip down to the mauve medium moving average, but then a strong move higher up through the July 24 high and back up over this possibly soon to be retired bright green lower tine, though not completely stabilizing over it. US dollar against the Brazilian real. A second bearish black crow after the previous session's indecisive spinning top. There was also a bearish dark cloud cover pattern. Prices were topped and tailed by the overhead March 21 high at 588.04 and supported, if only just, by the October 2020 high below at 580.70. In a wider sense, the market continues to be capped by the flatlining medium moving average overhead, that's currently at 589.96, and supported below by the combination of flatlining green short medium moving average, currently 577.75, and the gold very slowly rising long moving average, currently 577.03, that is just over the December 2021 high at 575.78. We also have above the recent 50% Fibonacci line at 595.21 of the December 24 to very early April 25 move. Now, overall, I'd recently drawn a pair of bullish patterns here for the same action, the mid-August to very early April 25 move, something I do not like doing. You see, I'm either either or type person. And these, but I'm not sure which one works better. So we have a dark blue bullish Andrews pitch hook with prices in between the overhead middle time, currently at 618.78, and lower time below, currently at 564.94, and the bright red bullish shift pitchfork with prices in between the overhead middle time, currently at 602.34, and the lower time below, currently at 560.94. There's also one key outstanding feature that is still in development. We are set up now for a possible monthly key reversal here. Thus, if we close on Wednesday the 30th of April, either over 588.52 or under 584.10, then we'll be on. Anything in between and we'll have a lesser outside month pattern. US dollar against the Mexican peso. An indecisive spinning top yesterday after the previous session's small bullish harami. However, yesterday's session was also an unusual key reversal up, closing on the April 2022 low at 1971.68. The tail yesterday also dipped down towards the 2021 low at 1953.63 and was the lowest low since October last year. Overhead, we have the significant congestion zone between 1987.96 to 1991.31, reinforced by the rising gold long moving average, currently at 1995.55. Whilst further below, we have the supports at 1948 to 1936.27, and between 1915.03 to 1920.38, made up from the 50% Fibonacci line of the November 20 to April 24 move and the March 2020 low, respectively. Indeed, looking overhead, we have a very wide congestion band centered roughly on the September 22 high at 2057.65, stretching roughly between 2017.20 up to around 2083 even area. The recent actions has set up the conditions here for April to possibly become a monthly key reversal. Thus, if we close on Wednesday the 30th of April either over 2053.10 or under 2045.80, there would be on, and anything in between and would have a lesser outside month pattern. Now, so far today, a small move lower, just edging, well, it's still within yesterday's range, not the true range, but the overall range.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.